All right, traders, I am back again with a video, and I just want to update the previous video with the trade for the Euro Yen off of the Kijun bounce here, basically off of the Kumo bounce, Kijun bounce, either or. I mean, I got into the trade on the Kumo breakout, then I had to take some profit and let this sit on me while it retraced. Looking for the retracement area, we kind of looked at this fractal level here. And then also we knew that the cloud and the Kijun was going to be some resistance. So as we saw that price come up, what I talked about was looking at this candle here. We had this little hangman here. You see the rejection here at the cloud. So you see a little bit of selling pressure coming into the market, a little bit of bulls entering. So this was a level, a nice level where there was a possibility of price retracing and then going back to the immediate trend that it was in here. All right, so all we looked at was this correction and where was this correction going to stop. So we looked for the resistance points for this correction to stop, and here it stopped at this point, and we started to get very interested after we saw the rejections, and then we saw this hangman here. My video was showing you to enter the market basically with an entry at this point right here, a little bit below that hangman, or right at the hangman, and then I myself would have put my stop loss at this point above the fractal level, a little bit above that wick, because the market likes to come back and test these areas. And then you could have also put your stop loss about a little bit above this level here. Now you see you would have got stopped out, and then the market would have went your way. But that's another area where I also put my stop loss, but I'm more technical, so I've tried to put my stop losses at the fractal levels. All right, so that's where I want to be, because if the market's breaking these bear fractals and not breaking any bull fractals, why would I want to not use the bull fractal as my stop loss? It just shows the structure of the market pretty much, and that structure is we're breaking these bear fractals, we're not breaking any bull fractals, therefore I can use a bull fractal as my stop loss. Now, I couldn't use my Kijun as my stop loss, and a lot of Ichimoku traders, sometimes they even use this cloud as their stop loss level, but that's way too much. Basically, I'm looking at this fractal level. If the market makes a fractal here and you're entering the market here, now this wouldn't have been a fractal at the time, but it was the previous high. So you want to have your stop loss at least above that level. And then once we had the violation here and then you saw it was a fractal, you knew this was your safe level to be for your stop loss, basically. But then we saw this price action here where the market painted this nice rejection here, and then it showed you this nice bearish reversal with this hangman here, and then the market violated that level, and then we had a little bit of indecision here for the past, two candles for about 8 hours, and then the market continued to drop. So currently it's a good 138 pips, but from here you would have had even more, and so it would have been a little bit bigger depending on where you got it. You could have had this trade for almost 200 pips right now profit. I took the earlier trade, so I had to sit through a little retracement. Now I'm looking at target shooting around this area here at about 127.095. I moved it up a little bit because I don't want to be greedy, but it can also be looking at this area. So I put a target here, and then I also want to have my target, I believe I have this one already set in, this level here at 126.143. So between that area, that's where we're looking for the market to go, and then maybe you could even go here for another little level. This is going to be right off of the wick here. So I like to go to prior support or resistance to find my targets. If once this market hits this level, then I'll probably look to take some profit or all of my profit, and then look for a level where I may be able to enter the market again, because there are certain trades that we could still get back into. The market likes to retrace back to certain levels, and once we see those levels here, it retraces right back to a level that we always look for. So I would have zoned this, had this nice zone here, and then you could see the market retrace right back into my zone here even without the Kijun Sen or the cloud. We could have saw that zone. We didn't need this on here to catch this, because basically if we take Ichimoku off the chart, you could see I would have my zones up here. I wouldn't have had this on here, so I would have marked my zones where my retracement area would have been to look for a trade, and we retraced right back into my zone. And so that's going to be my fractal zone, and then the market drops down. So I'm going to look back for another area where the market's going to retrace, quite possibly after bouncing off of this level. All right, so I'm going to go to my next level, which would be my zone, my fractal zone here, and see if the market will retrace back to that point. So now we're looking for the market to bounce off of this level, maybe retrace up to this point, and then see if it continues down to the next lowest level, which would probably even take us down to this point. If we retrace at here at this level, would take us down maybe to about 126 before you see another retracement, maybe, or else we just violate those levels, or else the market goes the other way. So I'm not a fortune teller. I don't know what the market's going to do. I'm not a magician. I just look at some of these technicalities with the market and with Ichimoku, and helps me to decide where I want to trade with some rules, and just to have a rule-based established trading plan already in progress and already set up for me. So that's what I do. Basically, yeah, the structure of the market right now is bearish. We're breaking bear fractals. Why should we trade long? I mean, you can counter trend trade here if you wanted to, but basically what I'm looking for is to follow the strength of the market. So I'm going to follow the strength of this market. Sorry guys, my voice is a little hoarse today. Just trying to get over this crazy head cold. But anyway, like I said, the market probably looking for a retracement, and a lot of times I showed you the zones that we retrace back to. I could go back on these charts and show you all these zones pretty much, and watch the market come pretty close to those zones a lot of times. I mean, it's not going to be a foolproof 100%, but it's a lot of times the area where you can look to get into the trade with the trend, with the strength of the market, not counter trend, but with the trend, with the strength of the market. So that's what we look at. But this trade currently is doing pretty nice. Even if you would have got in where I showed the entry off of this point, you'd have had more than I have here. You'd have pretty much near 200 pips right now. All right, so there's our targets down here. That's the update here. I have the RSI on here. Use it a lot of times for certain things. I'm not going to get deep into that right now, but one of the things I do, I like to see the momentum there. You know, look for bounces off of the 50 level. Looking for momentum to the downside if I'm taking a downside trade, but I'm not trading really saying, okay, well, we break oversold or overbought levels. I don't even really believe in oversold or overbought that much. You know, the market's equilibrium or disequilibrium pretty much, and that's what I believe. Oversold, overbought, would you call that disequilibrium? You could. But basically that's what I'm looking at. And so when the market's oversold or overbought, whatever you want to call it, based off of being above or below this 70 and the 30 level, sorry guys, so this would be basically considered oversold. Now traders looking to trade the market to the upside. Well, the strength is to the downside, the momentum is strong to the downside still here. This can carry on for quite a while, as you would see. Let's go back and see right back here. So you could see this trade right here. So looking here, traders looking at this oversold, overbought level, at this oversold level down here. This oversold level was very strong to the downside, even though we were in an oversold level, in an oversold state. So let's watch this, and I'm going to show you that I don't really look for that. When I'm looking at that, I'm looking at that as momentum and a chance for me to trade in that direction, especially if I have already a signal based off of support and resistance. All right, so basically let's call it right here. So this market, this whole trend, downtrend right here, this whole move to the downside was all this oversold level. All right, so if you're looking to get into a trade, look how much this dropped to the downside with strength, and then look how much if you're trading this violation here, it's just a move to the upside, not much. The better move is to trade with this trend, with the strength. So even if you're trading RSI, RSI, you wouldn't trade with the downtrend. You wouldn't really want to trade the oversold level. You would want to get this trade at the overbought level up here if you're going to trade that way. I mean, what you're going to look for is getting over when the market gets to the overbought level. You want to trade it when it comes back to the downside. That would give you more strength. So it would have been pretty much looking at trades coming off the 70 level, not looking down here to trade to the upside, because now you're counter trend trading, and really the strength is to the downside. You know, you see the market kind of moves out of that strength and starting to show strength to the upside, but it's not that much strength. It moves up and has a nice correction, but this is the move that you really would have wanted to look for. All right, and that's why I look for the momentum of this oscillator. I'm not really looking to trade any oversold or overbought levels. To really, what I'm looking for is to see I have momentum when I'm entering the market off of one of my support and resistance levels, pretty much. So that's what I would just look for. So now I'm just looking for this market to see if we could reach this level. If not, we might get a little retracement back into this zone here, and then we'll see if the market gets back down to that level. If not, we'll one of the other things. So basically what I'm going to be looking for is twofold. Either we stop around this area because we're starting to slow down, so show some indecision right here, and then maybe the market moves a little higher into my zone here, and then moves down to this support level here. Then maybe we get another retracement somewhere, and then maybe we can shoot for this level. All right, so that's one of the aspects. So I'm always looking to be prepared for what the market may do and have a plan for where I want to trade, or what I want to trade, or how I want to trade. So that would be one thing, but then the other aspect is it could just come straight down to this level, and then I got to look for my retracement point. It could be this level depending on what happens here. All right, so also I'll be looking for the bearish fractal, and we'll look for the market to retrace near those levels and then come back down to this point here. All right, and then another thing that I like to use the RSI for, like I said, I'm not really looking to trade off of these levels, you know, coming out of these levels here, or when the market comes out of this 30 level and trading to the upside or trading to the downside. I just want to see the strength to the downside. And when we get in this point here, I don't mind staying in this point. That doesn't tell me to get out of the market. That tells me there's strength at that point. To me, that's what I see a lot of times, and that's why I'm going to stay with the market even when we're down here. Now, the other thing that I really would look for is when the market comes down to this level here, either this level or maybe down to here where this level is. So when we get to that point, do we have divergence, you know, bearish divergence? We don't have divergence right yet, but I'm just showing you. So basically, if the market was coming down and I had this going to the upside, we would see some divergence, which would be a bullish divergence, which would let me know that maybe at this point, or whichever point where my support and resistance level is, I may see a correction or a move to the upside or whatever. All right, so that's what I look for a lot also, at support and resistance levels. All right, so basically up here when the market was painting straight across this level, but here we were pointing to the downside, this was a good opportunity to let me know, once we broke out of this point and saw the move to the downside, that there was strength in this move to the downside. There was divergence here, there was bearish divergence, and then the market did drop. It went a little sideways and then came out, had my Kumo breakout here, which I was prepared for, took the breakout, knew the market might retrace on me, retrace to my levels, just where I'm looking for, and then the market continues to the downside. So now I'm looking here, then looking for a retracement quite possibly, and then the market to move to the downside. All right, I'm showing nothing but bearishness on this chart with Ichimoku. As you can see, we have bearish there. I'm going to put in, let's put this in for the second. I don't have my Tinkinson on here, so let me put it on here so we could just go over some of the things really quickly. All right, so we have our Tinkinson on here now. All right, so let's go back over these short rules. We're bearish here. We already had this bearish crossover here. It's a weak signal because it's up in the bullish area above the cloud here. All right, and then Chiku span now is way below price. It's 26 candles behind us. So let's see exactly where it is. I don't put it on my chart because I don't need to, because I can look back and see where it is just by doing this right here. I'll grab my rule and then I just go back 26, which would be right here. So Chiku span is right here. It's 26 periods behind price. That's 26 periods right there. I already know where it is. When we had the breakout right here, I go back 26 periods. 26 would have bring me down here. I knew I was below price. That's what I'm really concerned about. I knew I had resistance hitting me here with the cloud. And Chiku span bounced off of that resistance. That's where you had this price make a correction here and then bounce off of this level. So if I put the Chiku span on here, you'll see we probably had a bounce in this area. Let's put that on the chart. The reason I don't have it is because if I'm a new trader trading Ichimoku, yes, I want to have it on my chart, but I've been trading it for quite a while, so I know where it is just by doing like I just showed you. So that's why I don't put it on my chart. And then you could see, like I said, we had a bounce at this area and then retrace. So the cloud was resistance here. As we broke out of the cloud, we saw resistance facing us with this Kumo, and then the market moved up to the upside, found resistance here. Found support here. And then we found resistance against the ceiling here with your Kijun and your Kumo. And then we saw the price action that we talked about, and then we saw the market drop to the downside. Very nice move already. Plus we have the news from the yen. That's also the past news that we had with the BOJ. That is helping us out also with this trade. So we kind of know fundamentally what this market is looking to do also. So that also helped out with the process. But I'm not a fundamental trader. I trade the technicalities of the market. So I'm just looking at those things. Let's take this off of the chart. I'm pretty much done here. All right, so I'll come back and update, see where we are. Definitely really want to look for this level to start taking some of that profit. Some traders probably might have taken profit already because they're well up to 200 pips maybe if you took the entry to here at this point. I'm a little below because I took the breakout. So as I said, now another way is to just watch, and when you do come out of this when you do come out of this oversold level, you could start looking to take some of your profit off of the table also. So there's so many things you could do, and then you could trade without the RSI and still have levels where you want to trade and look for. A lot of times you could do a 2-bar back stop loss where we're here with our entry right now. So another thing is, if I want to move my stop loss, this is where price is right now. And then I go 2 back, 1, 2, and I have my stop loss here. So then when the market starts slowing down, it'll really bring my stop loss here. So the next time I will be, if the market stalls here, I'm moving back 2. I'm pretty much here. So it helps me to catch a lot of my profit already. So many traders don't know there's different ways to really look at taking your profit. So that's one way. A lot of traders have a hard way of deciding how to take profit. You can have a select number that you're shooting for. So you say you got to 100 pips, you take profit or whatever. But I'm looking at the market getting down to this level, and then I'm gonna look to take a lot of that profit. I'm also looking for a retracement in this level here. Now if we go up above that point, then I may start thinking twice. All right, but I do also know that the market has the ability and capability to come back to Kijun-sen. Kijun-sen still flattened. Kijun-sen basically is starting to flatten out, and you see it because it's flattened out with the market. But if this flattens out, then I know that we're going to be in a slight range, and then the market's probably going to retrace. Has the ability to come back to that point, because that's going to be one of your resistance levels. I don't want to see that happen really, but I'd like to see this continue to move to the downside, because if it does that, I still have strength to the downside, and that means I'm moving to the downside with price, right? All right, so that's it, guys. Basically, this Ichimoku system is a great system to learn. I mean, it's something, I don't know, it looks complicated to a lot of people. That's why a lot of times you'll see me trade with only my Kijun on here, and I won't even have this here. All right, so I want to make it look less confusing and a little bit more simpler for people. Then also, I still already know where my TK crossover was, and I kind of know where this Kijun, where my Tenkan-sen level is, in case I'm looking for a bounce off of that level, or looking for price to violate that level, or looking to use it as whatever, a stop loss or whatever. I kind of know where that level is from just trading it for so long. All right, so that's what'll happen after you start to develop strength and trading it. Then you can start eliminating some things and still using those things, but you don't need to see them on your chart because you see them where they are. You may put them in for a second just to make sure of your levels, and then you could take it off. You don't need it sitting there for the whole time to clutter up your chart. It makes it look a little cleaner, helps you to see the price a little bit more and pay attention to your support and resistance levels and all that stuff. All right, so that's it, guys. I'll try to keep up update on this video and let you know what's going on. But until next time, guys, have a great trading day and a great trading weekend. God bless. So long.